In this video, I'm going to be making a Fluence Energy stock analysis. Now, if you don't know what Fluence Energy makes, well, that is energy storage in huge containers like this, and that is lithium-ion batteries. As you can see, recently it has absolutely just skyrocketed. I mean, we of course have been trading on these prices before, but I mean, just look at last year, we were trading sideways on these prices for quite a while. Then we just took the elevator down because they missed on earnings, and as you can see, then we're trading about $3. So some people are sitting at a 90% loss before right now, and it has absolutely exploded recently, which of course is nice to see. Now, if we take a broader look at the stock, as you can see right here, it has been quite volatile. You can see it started quite high up back in 2021 when it was first publicly launched, and then we went all the way down to about $8, then all the way up again to $31. As you can see, it just peaks and valleys all the time, so it's quite a volatile company. Now, let me make each candle an hour again. Now, recently, as you can see, we've been in the upper RSI for quite a while. Of course, we'll see some dips down here in the lower RSI, but overall, as you can see, we have been quite up high in the RSI, and we even see some overbought quite often. Now, if you know what RSI is, that is the relative strength index. This shows the difference between buyers and sellers in the market. So when we're up here, we have a ton more buyers than sellers in the market. Between 50 and 70, we just have more buyers than sellers in the market, and we're going upwards. Below 50 and above 30, we have more sellers and shorters in the market, and we're trading downwards. And down here below 30, as you can see right over here, for example, we are oversold. Now, always be a lot more careful when we're oversold or overbought, because when we're up here or down here, it is a lot more volatile. Now, if we look at the beta in this company, it is actually surprisingly low at 1.64, meaning it is 64% more volatile than the average index. Now, in the earnings, as you can see, the reason we also fell quite hard on this one, I mean, just look at this. We fell by 72%. That is absolutely crazy. And this one as well, I mean, just look at that, down by 20%. Now, the revenue surprise was up by 31%, but earnings, I mean, look at that, down by 19%. Now, this last one, as you can see right here, the estimate was wrong by 198%. I mean, just look at this, absolutely nice. But then, interesting, like the revenue was lagging behind. Let's hope they can guide positive for both the revenue and their earnings the next time, which is in 48 days. Now, as you can see, it's a relatively small company with a market cap of $4 billion. Now, they don't pay out on dividends, of course, and that is because they haven't really been that profitable, as you can see down here. Now, if you look at how they make their money, as you can see, that is in energy storage products and solutions. Of course, they also make some money in services, of course, repairing these, and then also in some digital applications. Now, in the overview of the stock, you're going to notice this right here. We have a ton of closely held shares. The reason that is it is partially owned by Siemens. So this is, of course, a lot of shares owned by Siemens, which they just can't go out and sell. These often have a lockup period or have some certain terms that need to be met before they can sell them. If they're met, of course, the market could be flooded with these shares and the stock price could plummet. But I doubt that's going to happen. Now, they also have a small amount of debt, as you can see right here, just 409 million, which is not that much, and they even have cash and equivalents of 459 million. So more cash than debt. That is also very nice to see. Now, they have a relatively small amount of employees for a company like this, which is lovely to see. As you can see, their EPS annually, as you can see, it has just been upwards slide a bit, and currently we have an EPS of 1.38. If you don't know what that is the price to sales ratio. I mean, just look at this. Of course, they're also making some money for the first time last year, which is of course nice to see. And let's just hope they can keep on doing that. Now, if we scroll down to the performance, as you can see right here, 2021, it has been a coin flip stock. We had 2022 down by 50%, last year down by 33%, 2021 up by 6%. This year we're currently up by 28%, but as you can see, at some point we were down by, what is that, 78% for the year, which is absolutely crazy. And then 2023 up by 47%. So of course, it is a very, very high volatile stock. So you really need your risk parameters in order if you want to buy something like this. Now, the technicals for this, for the day, it's a strong buy. For the week, it's a strong buy. And for the month, it is a strong buy as well. So overall, I mean, just look at this. It has absolutely just rocketed up. And we also have this golden cross, which formed back in September. I mean, it's just performing like crazy these days. Now, the analyst rating on this are quite alright, but because it has ran so fast, of course, they're all negative. Now, we have 4 strong buy, 14 hold, and 3 strong sell. But overall, the average is down by 54%. To be honest, it wouldn't surprise me in this stock. I mean, just look at this. If we make the graph a bit bigger again, I mean, just look at this. Let me just make it a bit clearer to see. So let's take 4 hours. Look at this. As you can see, it is just valleys and peaks and valleys and peaks and valleys and peaks. So overall, that's going to be quite interesting. Now, we are actually on a current breakthrough point or support level right here, as you can see. We can break through this right here. Chances are we're going to go even higher. If we do that, then the next proper breakthrough point is up here at $25 a share. Now, if we go even higher than that, of course, we do have one up here at 31, and then all the way back up here at 39. But I think these are less realistic, to be honest, because of course this one was just when they were launched, and really people really didn't think the stock should be worth that much. This isn't a proper peak. Now, as you can see, overall the analyst rating, it is a bit down. We even have someone says it should be worth $2. I think that is a bit too pessimistic. Now, the annual EPS forecast, as you can see, last year was positive, and it was. This year they're estimating negative. So hopefully, of course, we have the earnings right here. If they can guide quite a lot above, hopefully that would be crazy, and Fluence Energy would just skyrocket. Now, 2026, they're estimating just a small loss, but then after that, they're estimating profits, which would be nice. And annual earnings, they're guiding slowly but surely. And something interesting is they're not guiding a lot more. This means, of course, they would get more. Of course, they would be more profitable, or just the general operating costs would be lower, which would be nice. Now, I have to say, I don't own any of this stock at the moment, but I definitely like their business model. But I just think they have risen too fast, and it wouldn't surprise me if we see a rebound downwards again towards the $8 and $9. To be honest, it's not unrealistic for me. Now, that was my stock analysis on Fluence Energy. Now, if you like this video or want to see more videos like this, please leave the company comments analyzed in the comment section below.